Hello everyone and welcome back to the channel. Today we're diving into the exciting world of trading in the stock market. Whether you're a complete beginner or looking to refine your skills, this guide is for you. We'll break it down step by step, covering everything from the basics to more advanced concepts. So you're ready to jump into the world of trading, but you're not sure if it's even possible with a smaller account. Trust me, I get it. When you're starting out, it can feel like the stock market is this exclusive club reserved for people with tons of cash to throw around. But here's the thing, it's not like it used to be. You don't need a fat stack of cash to get started anymore. Online trading platforms like Robinhood, Webull, and M1 Finance have revolutionized the game. These platforms often offer zero-commission trading on stocks and ETFs. That means you can buy and sell without getting eaten alive by fees, which is a total game-changer for smaller investors. Start with an amount that you're comfortable, investing without putting your financial well-being in jeopardy. Think of it like this. Every dollar you invest is like a seed that you're planting. The more seeds you plant, the more potential you have for growth. The key is to start small, be consistent with your investments, and let the power of compounding work its magic over time. The most important thing is to just start. Even if it's just with $100 or even $50, the point is to get your feet wet, learn the ropes, and start building that snowball of wealth. Be patient, be consistent, and focus on the long game. Educate yourself continuously. Read books, follow financial news, and maybe even take a few online courses. Knowledge is power, and the more you know, the better decisions you'll make. Also, set a budget for your investments. Decide how much you can afford to invest each month and stick to it. Regular, disciplined investing can help you build a substantial portfolio over time. Celebrate your small wins. Every milestone, no matter how small, is a step towards your financial goals. Remember, everyone starts somewhere. The important thing is to take that first step and keep moving forward. Think long term. The stock market can be volatile in the short term, but historically it has trended upwards over the long term. Stay the course, keep learning, and watch your investments grow. Now let's talk about futures and options trading, which are often seen as the more advanced side of investing, and for a good reason. These things can get pretty complex. But if you're just starting out, don't even think about touching them yet. Futures and options are like financial weapons of mass destruction. In the right hands, they can be incredibly powerful tools, but in the wrong hands, they can blow your portfolio to smithereens. The main reason why these things are so risky, especially for beginners, is because of something called leverage. Leverage is basically like borrowing money to amplify your bets. If you're right about a trade, leverage can magnify your gains exponentially. But if you're wrong, leverage can amplify your losses just as dramatically. Focus on understanding the basics of stocks and ETFs first. Once you've got a good grasp of the fundamentals, then you can start exploring the world of futures and options if you're still interested. Treat them with the respect they deserve and never invest more than you can afford to lose. Now let's talk about trading coaching centers. These programs have been popping up all over the place lately, promising to turn you into a trading guru overnight. But are they worth your hard-earned money? Well, the answer, like most things in life, is it depends. There are definitely some legitimate coaching centers out there that can provide valuable education and insights. Especially if you're someone who learns best in a structured environment, having a mentor or a community of traders to guide you can be incredibly helpful. But not all coaching centers are created equal. In fact, there are a lot of shady operators out there who are just looking to take your money and run. So, how can you tell the difference between a legitimate coaching center and a scam? Do your research. Look for centers that have been around for a while and have a proven track record of success. Check out online reviews, see what other traders are saying about them. And don't be afraid to ask tough questions. Remember, a real teacher wants to see their students succeed. Let's talk about trading tips, because let's be real. Who doesn't love a good shortcut? In the fast-paced world of trading, everyone is looking for that edge, that one piece of advice that could make all the difference. But here's the thing about trading tips. They can be both a blessing and a curse. While they can offer valuable insights, they can also lead you astray if not approached with caution. On the one hand, tips can be a great way to get new ideas and insights. They can open your eyes to opportunities you might not have considered. Maybe you follow a trader on Twitter who has a knack for spotting undervalued stocks, or you subscribe to a newsletter that provides in-depth analysis. Or perhaps you stumble upon a blog post that outlines a unique trading strategy that seems promising. These tips can be incredibly valuable in expanding your knowledge base. But here's the danger: blindly following trading tips without doing your own research is like playing Russian roulette with your money. The market is unpredictable and no tip is foolproof. Just because someone else says a stock is going to go up doesn't mean it actually will. Market conditions change, and what worked yesterday might not work today. Remember, these tips are often based on someone else's analysis, their risk tolerance, and their financial goals. What works for them might not work for you. So how should you approach trading tips? With a healthy dose of skepticism and a willingness to do your own homework. Think of them as a starting point, not a finish line. They are the beginning of your research, not the end. If you come across a tip that piques your interest, take it as a cue to dig deeper. Don't just rush out and hit the buy or sell button. Take your time to understand the underlying factors. Instead, use it as an opportunity to dig deeper and do your own research. Look at the company's financials, market trends, and other relevant data. The key is to be skeptical, ask questions, and never invest in something you don't fully understand. Always remember that due diligence is your best friend in the world of trading. By taking the time to verify and understand the tips you receive, you can make more informed decisions and increase your chances of success in the market. Now, let's talk about the most important part of trading, the psychology of it all. You can have the best trading strategy in the world, but if your mind isn't right, you're going to lose your shirt. One of the biggest challenges for new traders is controlling their emotions. Fear and greed can wreak havoc on our trading decisions. When the market is crashing, it's tempting to sell everything and run for the hills. On the other hand, when the market is soaring, it's easy to get caught up in the hype and start making impulsive decisions. The key to mastering the psychology of trading is to stay disciplined and stick to your plan. Before you even place a trade, decide how much you're willing to risk, what your profit target is, and when you're going to exit the trade. Write it down, and most importantly, stick to it. The market will have ups and downs. Stay calm, stay focused, and don't let your emotions get the best of you. Be patient, be consistent, and focus on the long game. So you're ready to dip your toes into the exciting world of trading? It's a thrilling journey full of potential and opportunities, but also fraught with risks and challenges. That's awesome. But before you go all in on the latest meme stock, let's talk about some key pieces of advice that can help you navigate this complex landscape. First things first, start small. This is crucial because it allows you to get a feel for the market without risking too much capital. When you're just starting out, it's best to treat it like a learning experience. Absorb as much information as you can and don't rush the process. Think of it like learning to drive. You need to understand the basics before you can handle more complex situations. You wouldn't hop into a Ferrari and immediately hit the racetrack, would you? No, you'd start with a beat-up Honda Civic in an empty parking lot. The same principle applies to trading. Trading is the same way. You need to build your skills and confidence gradually. Start with a small amount of money that you're comfortable losing and focus on learning the ropes. This way, any mistakes you make won't be financially devastating. Once you've got a few wins under your belt and you're feeling more confident, then you can gradually start increasing your investment size. Second, never stop learning. This is a lifelong journey. The market is constantly evolving, which means your education as a trader should never stop either. Stay curious and keep seeking out new information. Read books, listen to podcasts, follow experienced traders, and take online courses. Engage with the trading community to exchange ideas and strategies. The more you learn, the better equipped you'll be to make informed decisions. Knowledge is your most valuable asset in trading. And finally, manage your risk. This cannot be overstated. Risk management is the cornerstone of successful trading. One of the best ways to manage your risk is to diversify your portfolio. Don't put all your eggs in one basket. Another crucial risk management tool is setting stop-loss orders. These can help you limit your losses and protect your capital. Keep a trading journal to track your trades and learn from your successes and mistakes. This will help you refine your strategies over time. Remember, trading is a marathon, not a sprint. Patience and persistence are key. Good luck and happy trading. Trading in the stock market can be a rewarding journey with the right knowledge and approach. Remember, success comes from education, discipline, and a long-term perspective. Stay tuned for more tips and insights on our channel. Don't forget to like, subscribe, and hit the bell icon for more updates and valuable content on trading and financial literacy. Share your thoughts and questions in the comments below. We're here to help you succeed.